Hello, everybody. This is Monday, March 13th, 2023. This is John Blank, Chief Equity Strategist and Economist at Zacks Investment Research. As usual, the disclosures today are where we start, and these views are mine. I have a PhD, and they are not necessarily the views of Zacks Investment Research. Okay, today we are going to look for the top stock plays in financials. The huge regional bank sell-off. We've had lots of concern over what has happened with Silicon Valley Bank and other players like Signature. So now we need to look into the actual stock plays that might be available to you in the financial sector. There are three parts to this. Part one, we will look through the top financial stocks by market cap and weigh them on their balance sheet metrics. Balance sheets matter for banks, big time. Part two, top financial stocks by market cap, and we will look into the earnings and free cash flow to see how their fundamentals are doing. In part three, of course, we'll go back to the same bin of stocks and we'll look through their share valuation metrics. Keep in mind, these are all related. There are three different ways to look through a bank sector and figure out stocks. We're often going to talk a lot about the REITs and to some degree the insurance companies. So let's get going. Okay, top financial stocks by market cap. The balance sheet metrics. The balance sheet metrics for banks, remember, a lot of them are making loans or making investments into the financial markets. So this gets to be much more important than it does for most companies. All right, so here's our lead out. I want to point over here is our industry codes. We have 6 of them. They're going to run 46, 47, 48, 49, 50, 52. So over here, you've got the listing of what they are. Those are the major banks, JP Morgan and Bank of America. And of course, their market caps are huge. The $389 billion market cap for JP Morgan, $244 billion for Bank of America. Now, if we go down here in code 50, that's investment bankers and managers, and we put Morgan Stanley and Goldman here. They are $155 billion and $115 billion. So if you're looking for worry about the big majors, so most of them are in this sector here, 46. I've got a couple of them down in here. Anything less than 100 billion probably should not be concerned with. However, notice SIVP appeared in our ticker search in banks and thrifts at the very bottom. This will be the area where we're going to see lots of interesting things. First Citizens in here, East West is in here. Lots of interesting. Citizens Financial Group, which is up in Rhode Island. Huntington Bancshares leads the way at 20 billion market cap. Don't get confused here. These are huge, 390 billion. This was only 6 billion in market cap when we ran this screen, very small. Over here is the Berkshire Hathaway. That obviously will be put in insurance, 672 billion, just a massive size for the market cap. Really interesting to note that Berkshire Hathaway has double the market cap, triple the market cap of Bank of America. Lots of information here on market cap. Don't just skip through a screen like this without paying attention here. Lots of names. Here's American Express, CME Group, and Blackstone. That's ICE Exchange. Lots of information. MCO will be Moody's. So lots of information. NASDAQ, Discover Financial Services, DFS, Deutsche Börse. All kinds of information here that we're going to use throughout this discussion. Come back to this here chart a lot, and keep in mind this is where you can start to learn where to put the tickers into the sub industries, not the sectors, but the sub industries. And we've got 6 of them for you today. All right, just to show you how this works. Prologis and Brookfield, ticker BLD and BN. If we go back up, Prologis and Brookfield, there it is, PLD and BN. They're going to be in my real estate sector. So obviously the real estate sector we worry about sometimes. Prologis is the biggest one in our sector. Brookfield is smaller, but you can see why. Brookfield has been selling off dramatically from 60 to 30 to a 50% haircut. Did the earnings estimates really fall apart? Not really. I mean, they're coming down. We know that story. That's the slowdown story. But the ratcheting up from the post-COVID to the pre-COVID is dramatic. So you would have thought this would have stayed up here. This was anticipating this. But now this is anticipating something entirely different. This share chart is worrisome. It's already down to 2020 lows for Brookfield. So this is a property, commercial developer that we got to worry about. Prologis, on the other hand, has only come down a little bit from 170 to 120, a little bit, meaning $50 a share, 35%. But again, a massively important chart to show you just how important this earnings estimates have been for Prologis. Again, now the whole story is changing. The anticipation that was done by the share charts here has been picked up here. So we got to think through this a little bit with share price leading estimate revisions. And that should concern any of us. So Brookfield may not actually be cheap, even though it is cheap. Prologis may be the same case. All right, revenue per share charts. By the way, this is a relative ratio. So these are just relative to their peers. I put up 6 different names here. We'll go through them. They're JP Morgan, obviously. Revenue per share, you're going to see this a lot. You're going to see, then the sell-off, of course, it went up, and then it started to come back on actual growth of revenues. This is also true for First Republic Bank. Oh my God, remember this company? Yes, this is the one that's in the news right now. First Republic Bank is actually really attractive from a bargain perspective if it doesn't blow up and disappear. Good luck with that. This is the challenge of any stock market. You have to buy the blood in the streets on First Republic. And obviously, there's a lot of it, and I may be relatively sanguine to point out that it really may disappear as a company. American Express, the credit card companies, revenue is growing. Is that good or bad? Really interesting question. Now let's go up to Royal Bank of Canada. It looks a lot like JP Morgan. Again, big sell-off here, but now building up its revenues into whatever's going to happen. Again, Cullen/Frost Bankers, fascinating one. This is down in San Antonio. It's again, if you're worried about Texas, this may not be your play. Oryx Corporation, ticker IX. This is a Japan-based company. Again, you're going to notice here in Japan, here in Canada, and here in JP Morgan, or in the regionals, or in the credit cards, everything has come back nicely in the last year from a revenue per share perspective on these names. So it may actually be, from a long-term perspective, time to acquire some of these names. All right, revenue per share here. Now we've got Berkshire Hathaway. PNGAY, this is one. This is Ping An. It's a giant life insurance company in mainland China. Very hard to weigh these against each other, but basically you're going to see there's nothing going on here. Goldman Sachs and BlackRock, fairly subdued relative to those other companies we looked at. PSA and AMT are REITs, Public Storage and American Tower. These have been extremely well. These are the development stories that we talked about, real estate development. These are the areas that are actually doing well. Now, I want to point out Public Storage is 2,800, 2,900 of these. And American Tower, of course, is wireless towers. So this is specialized stuff. This is different than these other players that have economy-wide exposure. Obviously, they do have economy-wide exposure, but they're in niche businesses that are growing strongly. They have been doing well. Brookfield, here we are. And here is the worry. You have to worry about this company. T. Rowe Price, that's mutual funds. Chubb and the Progressive. The Progressive is interesting. They're out in Ohio. We're going to find them a lot times today as being a very attractive stock. Total liabilities, I just want to point out American Express and First Citizen Bank shares. This is a fascinating run up. This is a serial acquirer. This company is $600 a share in stock, $100 a share in earnings. Check it out. FCNCA, really worth your time to learn this story. And again, of course, American Express. People are putting a lot of money on credit cards right now. You got to wonder what's going on here. Now, don't confuse Citizens Financial, which is here, with First Citizens. This is in Rhode Island. That's in North Carolina. Capital One versus American Express. As you can see, Capital One doesn't have the story of American Express. I imagine this is somewhat travel related. This is less related to that. Keep in mind, again, here you've got 2 different China banks, Industrial Commercial Bank and Ag Bank, both of them building liabilities. This is how the Chinese work. They basically run central planning through their banks, and they're building up their liabilities because they're trying to grow activity through those banks. Liabilities too. Again, Ping An here, Morgan Stanley, Goldman here. Like I said, American Tower, Boston based, but it's large and global. It's a REIT, worth knowing about it. Simon Property Group, fascinating story here, based in Indianapolis. It used to be in property development of shopping malls. Now they're in a lot of different stuff. You need to look into Simon Property Group. Interactive Brokers, going to show up a lot of times today. Interactive Brokers is worth knowing about. There you go. Building the business up. There's a lot more liabilities, but they're also going to become quite strong. Chubb, ticker CB, huge property casualty company. They're Swiss based. Definitely one to keep in mind as well. The total debt to capital. Once again, we got JP Morgan, First Republic, Moody's, the rating agency. Oryx comes back into play. And again, Cullen/Frost, they're down in San Antonio. So Royal Bank of Canada also gets a look. So again, here, is it good to have more debt to capital relative to the other companies? It's a bull or bear debate. I assume you have more debt to capital because you have more business booked in your bank. Remember, this is bank financial statements. This is not companies. So there is a difference here, and these may be names you want to look into because they're actually building out their businesses from a financial perspective. Remember, these are relative ratios in their industry. So it's relative to their industry. These are what these ratios will end up applying to. Total debt to capital, again, Simon Property Group coming to the table. Let's move to the next one. Stocks by earnings and free cash flow. All right, we went through the balance sheets. I showed you a lot of the names. I've showed you a lot of the sector breakdowns, how Zacks does them, the 6 sectors, and then to the companies. Again, at the end of the day, when you're picking stocks versus just ETFs, you want to look for trades that might actually work for you on a company-specific tactical basis. And I'm going to show you that there's some tactics going on that are worth knowing about. It's not a clean story to just look at the top of the financial sector and say, okay, they're all going down. Not true at all. Some are going down and some are going up. That's what makes financial analysis fun and interesting. And also, you can learn a lot about what's going on out there in the world. All right, First Citizens, again, over here, earnings retention. They pop up again and again. This is a serial acquirer, like I said, $600 a share based in North Carolina. Well worth knowing about. First Republic, of course, we know this name. In the news right now, based in San Francisco, it's at the heart of the regional bank crisis. But in fact, they're doing quite well relative to their earnings retention. This is positive for First Republic. American Express, again, earnings retention. So they're making money. American Express pops up. So these are the names we want to talk about. First Republic, First Citizens, and American Express. A lot today is just putting these names in your head so you can check out online with Zacks.com what to look into more. Berkshire Hathaway, of course. Earnings retention relative going down relative to this industry, but still very strong performer. Buffett obviously has built a really nice franchise that's going to hold up well in an environment like this. So keep in mind, Berkshire Hathaway, obviously, that's been around a long time. I'm not telling anything you didn't know already. Return on equity. Again, this is a relative ratio, but let's see who comes out on top here. JP Morgan, Regions Financial, which is based in Alabama, actually. Now, here is First Republic. Of course, they're in there closely, but Regions Financial does a little better. That's the Alabama story. Discover Financial, based in Chicago area. Again, another credit card company that's doing quite well. American Express here, Discover there. You can see that these 2 credit card companies are doing well. East West Bancorp, based in Los Angeles. A lot of business in Asia. This is coming up strongly. Interestingly, through 2022, even though the COVID shutdown was happening, they did not experience any problems with that. HDB, worth knowing about this. This is a world-class Indian bank, ticker HDB. So again, this is a lot about just learning tickers. So let's go through them. JP Morgan, Regions Financial, Discover, HDFC, East West Bancorp, and American Express. All right, Ping An. Obviously, this is the huge sell-off that took place in the markets in China with Xi and everybody worried about it. Is it a bargain or is it a value trap? Good question. PSA, unbelievable spike in return on equity. This gets me worried. I don't know what this means. I think we got to look further in, like I said, to public storage. But clearly, if you think this is happening and they're breeding the market, that's great. Simon Property Group. Fascinating story with real estate development. Is this good or bad? Again, it depends on the cyclicality of this company. Again, I would worry here and here about this because it's kind of out of sequence. But again, this is why we got to point these companies out to you and get you to go to Zacks.com and check them out further. Marsh and McLennan, big New York-based insurance broker. They come out as doing quite well in return on equity. All right, free cash flow yield. Let's see who pops up. Hong Kong-based HSBC, First Citizens, once again, here they are, First Citizens. This company is just making money hand over fist, $100 a share, $600 stock. Probably never heard of this company. Keep it in mind. EWBC, again, this company is coming right up out of the post-COVID environment, doing quite well in this Asia focus on the West Coast. Two big names worth thinking about, First Citizens and East West Bancorp. Again, I told you I wanted to look into the earnings power. This is what we can find on Zacks.com. First Citizens, again, here's the $100 a share mark. $100 a share mark. East West Bancorp is at the $9 a share mark. You can buy a $90 stock for $9 a share for 90, or you can buy a $100 share for 80. So you can see 8 or 9 PEs are in play here. A little bit of a pullback going on in both shares. A lot of pullback in First Citizen recently. So now you have an opportunity here, if you would want to believe in this bank, that this is a great opportunity from a valuation perspective, as it is in East West. So again, if you want a story that's coming out of this whole shakedown with Silicon Valley Bank and Signature Bank, these two names look attractive to us here at Zacks. Again, earnings estimates have come down in 2024 a bit, but if you look over the year-on-year charts out of the post-COVID environment, these two seem to do quite well. Free cash flow yield. Again, down here, I want to point out these two REITs. Public Storage and American Tower find their way back to us again. Keep in mind, Public Tower Storage and American Tower are plays that are niche plays, probably true for Simon Property Group as well. Again, one of the things about picking stocks over sectors is you're going to find people have found their way to executives and strategic decision making that is paying off in these markets in ways that cannot be accessed at a sector or ETF level. Public Storage, American Tower, Simon Property Group. All right, now we're moving to share valuation metrics. Obviously, you got to talk about share valuations. Let's see who pops up as attractive here. JP Morgan, no surprise there. The biggest of the big. Royal Bank of Canada. Cullen Frost down in San Antonio. There's East West Bancorp again. Here's Discover and Capital One again. The credit card companies over here, American Express, Capital One, and Discover, they play a role. Fascinating. There it is. First Republic Bank. Who would believe it? They are doing well from an earnings per share perspective. So is it time to buy First Republic Bank? Good luck figuring that out. There's bull bear cases for this. They are in the eye of the storm. I would generally want to not be at the eye of the storm. I just don't think it's a safe way to play it. I think there's other ways to play around the edge of these things, like I said, with First Citizens and East West Bancorp. I'm not sure about this, but somebody's going to make a lot of money on First Republic, let's face it. BlackRock and Goldman, of course, they're up here doing quite well. Equinix, probably not heard this name, ticker AQIX. Very strong performer. You can see that here. Once again, Public Storage and American Tower appear. Simon Property appears again. Ameriprise Financial appears. This used to be part of American Express, I believe. It's doing quite well in this market. So ticker AMP suddenly appears for us. Some of these names we've seen before, Public Storage, American Tower, Simon Property. Some of these names are Wall Street stalwarts, and some of these names are quite big companies and you probably haven't heard of. Top of mind at this point, at least. Price to earnings growth. I'm going to skip this chart. It's relative ratio stuff. I find that a little confusing, but I looked into one company that came out of this. Realty Income, ticker O. It's engaged in the acquisition and management of commercial properties, which retreat rental revenue on lease agreements. It's a real estate investment trust. 11,000 properties. Price to earnings growth ratio is strong. Here I'm bearish. I worry about this market in this environment. This is one that I'd probably be a seller on. I think that's why the PE ratio is so high, because people don't believe in the growth here. Realty income, look into it. This may be one of your tells of a company you want to be avoiding as opposed to buying. Realty income, ticker O. All right, First Republic. There they are, just tanking. I want to point out that First Republic's been tanking for a year and a half. We all got caught up in a lot of news, but we missed the First Republic tanking. Those on Wall Street did not. It was right in your face with First Republic. Other names that are here: Cullen/Frost is back in play. Moody's is back in play. And of course, the stock exchange is right here, looking more attractive in this environment. Deutsche Börse and JP Morgan, obviously up here, always appearing. You always have to think of the major player with the major assets in the major position as one of the attractive plays at this point in time. First Republic, though, there it is, folks. I just want to point out, look at this chart. Woo! Is it time to buy these guys? It might well be if you think they survive. It's all about that story. All right. Again, Realty Income, ticker O, appears here. This group here is, we talked about them here, First Republic. Now we're back to Realty Income. San Diego-based acquisition and management of freestanding commercial properties. Again, you got to wonder what's going on here, whether these guys are topping out and you don't want to buy them. A lot of interesting names here. Tokio Marine and Ping An are obviously the Asian names. They look more pricey than they used to. But Progressive, I'm going to find this name a lot in this chart. This is one of the nation's largest auto insurers. Progressive actually looks pretty attractive sometimes. Keep it in mind, these names all have to go back to Zacks.com to find out more about what is going on. It's just not a clean play. Enterprise value to cash flow. Again, I want to point out, here we have Citizens Financial coming up. Here we have First Citizens coming up. That's in Rhode Island. This is in North Carolina. NASDAQ comes up. Blackstone comes up. Wells Fargo actually comes up as a play that's actually looking more attractive. Keep these names in mind. Again, these are relative ratios, folks. These are not the actual ratios of the given thing. So we're looking for relative ratios. All right, again, let's talk about these two companies. Progressive, ticker PGR, is based in Mansfield Village, Ohio. They are a major auto insurer, Progressive. And then Welltower, they're based in Toledo, Ohio. They're healthcare REIT and seniors housing and acute care. So Welltower is probably not a name you've picked up on. Here we have it, and there we have it. So these are Ohio-based REITs and insurance companies. We overall look Ohio, but there's actually stuff going there that's really doing well for somebody. And you need to get a hold of these charts to find your way to learn more about all these companies. So thanks for attending today. This is always a pleasure to do for you. And if you want to get a hold of these charts, please call us 866-794-6065. Email us at strategycall@zaxpro.com. Find us on the web at www.zaxpro.com, or go to LinkedIn and Twitter and find us there. One way or the other, this is the story of individual stock picking. More granularity in what's going out there. Obviously, very timely information for you given what's going on with the Silicon Valley Bank blow up. So, best of luck to all of you and happy trading.